important issue, and others will elaborate. The first is something that I was told when I was studied at Oxford, studied economics at Oxford about, 55 years ago. And it's a crucial point when people object to this approach, which is that it's vastly more important to be roughly right than precisely wrong. And virtually every bit of public sector accounting in the world is precisely wrong. The second point I would make, crucial, is of all entities in our societies, the one we most hope is eternal is our government. So it follows from that, the third point, that it really needs to have a long-run view of what it's doing. And if it is to have a long-run view of what it is doing, it has to have the best estimates it can make in accounting terms of what its balance sheet and the changes in the balance sheet looks like. So that comes to the fourth point. Accounting is absolutely essential. We know that for everything else, and it applies to governments too. And the final point is pretty well every government fails to attempt to value its assets and the changes in its assets, and it focuses far too narrowly on purely financial liabilities. In other words, their accounts are useless. This is a really important problem, and we've allowed our finance ministries and governments to get away with this for far too long. So that's my framework for thinking about it. And with that, I'm going to turn over to Jacob Soll to talk about the history of accrual accounting in 3 minutes and why it's relevant and essential in this area. Jacob.
Thanks, Martin. Great pleasure to be here with you and everyone else. And I agree, this has been my sort of personal crusade for the past decade. I was studying how modern states were built, modern European, Western European states in the age of capitalism. And in the archives, I was surprised to find enormous amounts of data about not only accounting, but also internal memos and actual policy papers explaining by early modern original European state builders just how important not only they thought accounting was, but accrual accounting, and in many cases balance sheets. That story got sort of interesting in the age of empire, as empire and war, as countries like Spain, France, and England started getting enormous debt. And then there were discussions about how to handle this debt. And those discussions were quite remarkable as we sort of follow them from the 16th to the 18th century. And what sort of emerges in the 18th century, and I'm writing a new book on virtue and capitalism right now, and I'm fascinated by Richard Price, that able calculator, as he was called, is that he connected the idea not only of virtue, but also of open government, the idea of representative government, with this ideal of having a state balance sheet that was open to all. Now, this was an older idea that had existed before, but he sort of comes up with a sort of theoretical framework around this. Why is this so interesting? This means that these key state builders, people who created states, rescued states from massive debt crises, for them, balance sheets were essential and in the fore from the 16th to the 18th century. So in some ways, we've kind of lost this culture. As a historian, that fascinates me. It also scares me a bit. But one last thing is, when some of us met, Simon, Dag, we met, and Ian a long time ago during the Greek debt crisis, we saw a state with its back up against a wall in very early modern terms. And this state was sort of forced to adopt better accounting, and it helped enormously. I believed at that point many states would see that and follow, and it didn't happen. And so I think that this long historical context, along with some more contemporary examples, sort of led and were the impetus, or was the impetus, for the work that we did in this book.
So thank you very much. I think that's fascinating. So something we apparently used to know and have now forgotten. I think I can guess why, but I won't go further into why. It's so inconvenient to be honest about one's financial position in a democratic age. So Dag, let me turn to you. tell us how we can use this sort of accounting, this sort of information to make government work better overall.
I think it's important to look at the opportunities, and those are both on the revenue side, which means better management of both assets and liabilities, which gives an opportunity to increase revenues significantly, maybe as much as 4 to 5%. But it's also an opportunity to reduce the cost. By better management of our balance sheet, we can reduce the cost of debt and the cost of liabilities through better management, which will, if we manage to convince especially the rating institutions and the financial sector that they should look at the whole balance sheet, not just the debt and the budget and the taxing capacity, as a way of measuring how solid and how good the finances are in a government. But that will, of course, take great changes from the financial market, but there should be huge interest from everybody, because there's an opportunity not only for governments to have better finances, but also for investors.
So let me move on from that overall to sort of some of the ideas that there might be about implementing this in specific sectors. And I'd like to turn to John Crompton, to talk a bit about that, possibly particularly with respect to the British National Health Service. What would you do with it, with these sort of ideas in a rather concrete way to make the system work better?
Sure. Well, I think a couple of points on this, Martin. First one is that actually in every country in the world, the graying populations will mean greatly increased government requirement for greatly increased expenditure as a whole, with health being easily the biggest part of that. So this is a substantial driver of forward-looking finances. And for the UK, for example, a reasonable estimate of what that means is a 5% fiscal adjustment that is equivalent of 5% of GDP every year for the next 50 years, largely driven by anticipated higher health needs. Now, as it happens in the NHS, one of the biggest single components of the UK balance sheet are the pensions owed to public sector workers, of which the biggest single component is NHS workers. In aggregate, those account for about 100% of current GDP. That is more than our fiscal debt, which reflects on a point you made earlier in the introduction, that just concentrating on debt is nonsense when it comes to understanding a balance sheet. Now, that's a very substantial number, and it will presumably grow as health expenditure increases, because more health means more workers, means more pensions. Now, if those pensions were funded the way they would be, for example, in a private sector organization, so in other words, the government had money and financed it in a broadly based portfolio of sort of diversified portfolio of relatively risky, so equity-like securities, then they would be earning about a 3% spread to their cost of borrowing over time. We've got 100% of GDP equivalent on our balance sheet already in these sorts of liabilities. 3% of 100% is 3%. We would have improved public finances by 3% of GDP, at the drop of a hat, accounting for a good chunk of that 5% overall adjustment we need. That's a huge thing. You can't do it overnight. We should have done it before. We haven't. You can't do it overnight. It will take time, but maybe over 15 to 20 years, we could fully fund those pensions. And remember, the reason why we don't fund them today is primarily because we only count debt. We don't count pensions. If we borrowed money, invested in it, that would be net debt, that would be net worth neutral. And as the investments grow in value, it becomes net worth positive, if we think of it from a balance sheet point of view. So that, I think, is one of the big ideas here. Healthcare is a huge challenge, but managing the finances of it properly is a huge opportunity.
So let me finally go to Willem to talk a bit more about the public finance side of this. So one obvious question that John's proposition just made is, it sounds that we are absolutely 100% confident that if the government sets itself up as a hedge fund, it's bound to make profits. but just talk a bit about what are the implications of this way of thinking about the public finances for the management of fiscal and monetary policy.
It greatly matters, both for the management of government as a going concern. Accounting in the UK does expenditure for 40% of GDP, in France for 55% of GDP. And it matters also greatly for the long-term planning of what needs to be done to achieve economic sustainability and to look at the intergenerational efficiency and fairness of the government decisions. We have to look at the public sector accounts in a consolidated way. That means including the central bank. They've come down from the peak post-COVID, but the Bank of England still has a balance sheet that accounts for 40% of GDP. The good news is that these are basically all government assets that they have on their own balance sheet, and the liabilities are overwhelmingly monetary liabilities, but are liabilities in name only. They create inflation issues, but in terms of sustainability, we have to consolidate the central bank and then take out the monetary assets to look at monetary liabilities to look at a long-term feature. We can only look at the sustainability of the public finances if we have a comprehensive view of their assets and liabilities. The UK, according to the IMF's most recent estimate, admittedly 3 years old now, has 96% of GDP of net worth. This has to be
negative, isn't it?
Either, sorry?
Isn't it negative? Did you say negative?
Yeah, a negative net worth of 96% of GDP. Yes, this has to be covered either through the present value of future taxes or through the present value of future spending cuts. And you have to present these things together, as only New Zealand does, as far as I know. Every 4 years, and within 30 days of every election, they have to do a comprehensive accounting of what the assets and liabilities are and how future government spending and taxes achieve both fairness and sustainability. So it is absolutely essential for governments that are interested both in efficient management and in sustainability and in fairness to look at public sector net worth.
We don't have very much time to go further into this, and I may not be able to get back to all of you, but just a couple of follow-up questions. I'd like to start with Jacob. So you gave a fascinating account that once upon a time we understood this and then we forgot. So why did we forget?
I've been studying that. It's not an easy question. Literacy, the importance of accounting in society, the importance of accounting discourse. So in particular in the 18th century, accounting was not only part of education, it was part of a vast sort of cultural system, particularly in Britain. That accounting, one of the things I described in my book, The Reckoning, has sort of descended in its sort of social prestige. That is a problem. So that's one important reason. You put in literacy and social prestige. Also in the world of banking and finance, accounting is sort of separate and lower. It's not as sexy as people tell me, right? I think these are huge problems. And also, I would add, finally, journalism. The FT used to have accounting journalists. Was his name Adam Smith? I think there was a guy actually named Adam Smith who did it. We need those people today. We need big columns about this on a regular, even daily, weekly basis to keep even players who are central to the whole game aware of these issues and talking.
Well, as long as it's not me, I will be very happy for us to have one. I'd just like to, perhaps Willem, I'm sorry, the others, just to get clear what we think these accounts would tell us. So let's suppose we knew that the balance sheet, the balance was zero. So the net worth is zero, basically. Is that a situation which we can feel comfortable this is a solvent government which will never get into serious difficulties. And if there's a minus 96%, this is a government which you refer to, which is basically on the rocks, and we should sell all the bond holdings. What does it tell us?
Even if it, sorry,
That's fine.
Go ahead, Willem.
even if it were zero, right, we'd still be some distance from fiscal sustainability because we are running significant material, full employment, non-interest deficits for the consolidated government in most countries, right? So there still would have to be a material adjustment. In addition, you would have to address the intertemporal, intergenerational redistribution issues associated with future spending and tax decisions and relate those to the outstanding assets and liabilities. So there is no way that you can say, okay, we happen to be in zero land. Japan is nearly zero net worth. They have massive debt, according to the IMF, 370% of GDP, but their assets are 378% of GDP. Does that mean they're in good longer-term fiscal financial shape? Is this sustainable? Absolutely not. We have to look at the details, the composition of taxes and spending, as well as on the assets and liabilities of the government, and do that on a regular, repeated basis.
I think I'm probably supposed to close this now, but I mean, it seems to me one of the issues perhaps you will think in the smaller sessions, the plenary sessions, that if you have long-term fixed assets like roads and hospitals and a defense system, or however you value that, and so forth, and lots of liquid liabilities, there's still obviously quite big issues of debt management and debt because of the fundamentally different nature of the assets and liabilities. So, and the second really big issue that we might want to consider is how the public sector balance sheet relates to the national balance sheet, which is, after all, part of the responsibility of the state. So there are even bigger issues here, but at least this is a huge step, it seems to me, in the right direction. And I think you've been given a very good set of ideas of why it's a huge step towards greater understanding. And I think that leads us to move into the plenary sessions, where you each will have the opportunity to question one of the individuals and have a more detailed discussion.
Thank you very much, Martin, and to the panel. It was a very interesting discussion, and I think the plenaries are going to be quite powerful, because it seems to me, and I have an economics background, PhD, and I actually studied monetary policy. And do you remember, Willem? I used to come and bother you quite a bit at Cambridge, and also when we were at Goldman's together. So it's very, very interesting. And I think these plenary sessions, we can actually really think about how net worth could be applied to the climate change crisis. Here already, we've seen councils and local authorities also facing funding shortages and becoming bankrupt. Now, this, net worth can actually provide a solution, or at least provide a conversation. And we're really hoping that the next administration in the UK and everywhere else, but particularly here, that we actually have a serious adult conversation about this, because I think it is a way of mobilizing GDP and increasing, reducing debt and increasing our net worth. And privatization is not the only solution. There is a bipolar way of the way we look at things. It's either privatization or state enterprises that are inefficient. So hopefully in the plenary sessions, you can explore that further. Welcome back. I'm just going to let Martin just summarize what he found in his room, if that's okay.
Briefly, I think basically the most interesting question we raised is why there's no interest in doing this. And Dag pointed out that he's been engaged in persuading people on this for 25 years. and I've only been sort of writing the occasional piece supporting him for about 10. I don't remember. And the reason I think is there's an absolutely fundamental collective action problem here, which is having good public accounts is in the interest of society at large, and society at large doesn't count for anything. It's not in the interest of people who run government, because it will almost certainly produce embarrassing and difficult truths, which is obvious from the data we already had. It's not in the interest of finance ministries, because it will make their management more complex, which they don't want. Simple rules are much easier. And it's not in the interest of the accounting profession, because in the end, the public sector is not going to be a really good client from their point of view. They've got other interests, particularly those of consulting. So nobody wants to do it, though it obviously makes sense. And that's, of course, a classic public good problem, and we have them everywhere. And this, I think, is another example. And I think that's the main point I got out of our discussion.
Absolutely, and that is an issue, and that's why I think that right now is the best opportunity to actually bring this back on the table and have this conversation. And I do feel quite passionate about that, because I know that particularly in our sector, the health and care sector, we are having restrictions in funding, and our population is aging, and there are, particularly in social care, it's shrinking and the demand is rising. The funding is shrinking and the demand is rising. What does that mean? That means productivity will fall, opportunities will fall. It'll have an impact on GDP in a huge way. And I do believe quite passionately that this is the time where we should really have that grown-up discussion and take it to government and almost find a way to have that conversation. So we are planning follow-up events. I know that this was a very short event. It was almost like an acid test to really pique people's interest and find the right partners. We are going to have some roundtables and technical white papers in Parliament that we will be generating and forming soon. But we are looking for partners widely. And we would encourage you to contact me and contact us so that we can partner further. So please do that. I really think that this is the right time, and actually we've got the right people in the room, but we'd like to be in a proper room. So let's really get together and forward this, please. I would like to thank everybody for attending, especially our wonderful moderator, Martin, and our authors as well, William, John, Dag, and Jake. We did miss Ian, and hopefully next time Ian can join us as well. We will have a closing poll. So if Mitch, you could just put that up, I would really appreciate that. Just to get a feedback, whether you have a better understanding of public net worth, how you would like to be involved in future events, and if we're allowed to contact you. But I do hope that you have left today feeling a bit more optimistic and can find an opportunity to implement public net worth, or at least the debate, a bit more seriously within governments. Okay, so thank you very much, everyone. I really, really appreciate your time today, and we will be in touch.